Hello everyone, welcome back to my channel. So this video marks the end of the week number 45 in this Road to 100k realized return challenge, and it has been a positive week for the markets, even though there was lingering in the air some concerns about the developments regarding the trade war, especially between the United States and China, and also this recent feud between the Tesla CEO Elon Musk and US President Donald Trump, and their back and forth exchanges on social media platforms. The markets, even though they had this downward swing on Thursday because of this escalation of words between Elon Musk and Donald Trump, after that the conversation got a little bit colder, and the markets managed to get back to more or less where they finished the day on Wednesday. And so, even though, of course, there was also the developments on the trade war between China and the United States, Donald Trump said that it was getting very difficult to negotiate with Chinese President Xi Jinping. But after that, because they had apparently a telephone call, a phone interaction with between them, and that was a catalyst for restarting negotiations next week. The markets also reacted positively here, and so they basically ended up the week at a very close level to the week high level, which was right around here, late on early in the session on Thursday. But overall, it was a very positive development as the markets continue to rise. We are already close to the price at which we bought these shares in the first place, which was, if you recall, $535. Even though, of course, as you can see here, we are still a long way off our the price we need to hit to break even on these shares after the loss we took on April the 9th. We need to sell the shares to break even at 548 and 33 cents. But in due time, we will do something about it. And now, over the course of this week, we managed to get a positive day on Monday. Here, these are the both trades that we did on Monday. On Tuesday, we basically gave our Monday profits back and a little bit more in losses, especially because of this pattern over here. This is the trades on Tuesday, and basically this point right here, I think it was the first one at which this upswing up over here was one at which we sold. We had to reverse our call positions because they hit the stop loss. And again here, this was also another one in which it hit our stop loss. Now keep in mind, these are not very big swings, but the reason they hit the stop loss was because the market, the options chain, the option chain for that day was extremely shallow. There were not many options available, and so I could not trade with very far out, very deep out of the money calls. And so I tried twice. It didn't work out. At every small twice the stop loss was hit with not very small swing, without any large swings. And because of that, I decided to give up the trading on that day, and I did not trade anymore, and basically start from a negative standpoint on Wednesday. Because as you can see here, if we sum up these 4 trades, we came out behind almost $5. So I decided to start to not to trade anymore on Tuesday and start again fresh on Wednesday. And Wednesday we just did one trade here, and then on Thursday, because the market continued to run up, it was a very productive week day rather, because here, as you can see, these are the trades that we did. Never mind the Pfizer trade, we managed to collect 30 cents on the on this call option. Now keep in mind, I sold call options at 5.35, which was our acquisition price, and because of that I decided not to put any stop loss. I could that selling these shares at 535 would allow me to break even on the price, even though I would not offset the loss that we had, but I was happy to get the money back and start selling puts on on the QQQ again, because selling the puts allow me to get much more premium, and I would recover from the loss much faster. And so I decided, all right, let's not be restrained by any stop loss, and let's just sell the calls at 535, and if we are assigned, yeah, so be it, no problem. But then it didn't happen. The market reverted on Thursday, and so at the end of the day, at the very end of the day, there was the opportunity to sell calls again at the very end of the trade, at of the trading day, which was, if I'm not mistaken, around, it was around here, yeah, on the 5th. Yeah, this was the point, and we managed to so you see that the volatility that was going on that day, because as you can see here and looking at the weekly chart, because of these large downswings towards the end of Thursday, there was a huge volatility in the market. The option chain was very deep, and because of that we managed in the dying seconds on the trading session, we managed to collect to sold options with this premium, which was very good, and we managed to collect a very nice premium for these, as you can see right here. Yeah, we sold these, and these expire worthless because this was in the dying sections the dying seconds of the trading day. Now on Friday I made a slight mistake. The premiums were very large in the option chain, abnormally large, but I felt, well, this is probably still going to be a good day in terms of volatility. But the reason why the premiums were so high was because I was not looking at the 0DTE option chain. I was looking to the option chain of options that expire next Monday on the 9th of June, and so by mistake I sold 3 calls with a strike price of 538. I decided not to sell the 535s because the price at the time was around 531, and it was too close, and I felt, well, premiums for the 537, 538 are still good, and I can still make some profit out of these shares and continue to work towards recovering from the loss we had on April the 9th. And so I sold the 3 calls with the 538 strike price at 33 cents. But then I realized the mistake. I saw that in fact these are options, as you can see here. These are options that expire on Monday and not on the same day, on Friday. And so I decided, all right, let's unwind the position. I'm not going to keep these options because I want the 0DTE, because I don't know what's going to happen on Monday. The market can jump overnight during the weekend, and it might happen that I can make a much bigger profit. And yeah, this would cap my potential upside only to 538. Still, I did not want to realize a loss, and so I put a order to buy back at 30, having sold those at 33, and that's why we managed to buy back at 30. We still managed to make $5.71 on the trade, and then we sold normally another 535 strike price call options expiring on the same day on Friday. We collected, of course, a much less premium. Still, we bought these back because we were hoping that we could make another trade at the end of the day, in the dying seconds of the trading session. However, at that point there were simply no calls available. The only call out of the money available was trading at 1 cent and so it was not possible to make any profitable trades in there. So I just decided not to trade anything. And here we have the 24 call options with the 27 strike price, which expire worthless. We keep the shares. So let's now look at Pfizer, and Pfizer continues to trade at not very wide trading range, as you can see here on the weekly chart, and so it stayed pretty constant here between 23.30 and 23.50, and then here on Thursday it suffered a lot also from the developments of that day, but then immediately came back the next day, even though it went really to the high of probably of the week, 23 around 23.55, but then subsided towards the end of the day. And so at this moment we still have these options left. This is basically a short strangle, so as long as the price keeps stays between 22.50 and 27, these options will fall away at the end of the next week. And we have at this moment 2,400 shares, which we can use as collateral to sell some more calls. And one interesting aspect that I was looking at over the past, I would say at the chart of the past year or something like that, here for example, is, as you can see here, and I will zoom in a little bit here, you will see that there is support, and as you can see it's a pretty strong one because it has been tested already more than once. Here it's support, which is in this case is a resistance because we are already below this price level, so there must be some sort of resistance more or less along the lines of 24.50 US dollars. And so because of this, and given the fact that we are at this moment on a price stock price which is far away from the price we want to get, which is the 26.21, which is our current cost basis, given the fact that we have that resistance and we assume that it's not going to be tested again over the next few days, probably the best course of action for us is to sell the 24 calls with a strike price of 24.50 next week. Now there is no guarantee that this premium of 3 cents will be there by the time the trading session opens on Monday, but still I think it's our best possibility for us to do it, because otherwise if we try to look for the 26.50 strike price, either we get a very very low premium, almost irrelevant, or we have to extend the maturity of our options very far into the future. And as you can see here, for the 3-week option, there is not, that possibility is no longer available. It's either 26 or 27, and so I think the best course of action for us is to try to capitalize on the fact that this resistance level is there, and so we will try basically to test to make sure that we are still able to capitalize from it, and without being forced to sell those shares at this price, which of course we don't want that. And if it happens and the price exceeds 24.50 by expiration, we will have to buy those calls back, which will give us a loss. But at the moment, given where we stand at the moment, and given the price behavior of Pfizer, and given the fact that no earnings are coming in the next few weeks, things should, with all this uncertainty going on, the stock hasn't reacted to the upside, so I think it should be pretty safe for us to sell these calls. And so yeah, that's the way we are going to proceed. And when these calls expire at 27, we will do the same with these six contracts. So we're going to sell 6 more contracts at a price of with a strike price of 24.50 and see what happens. Yeah, and this is it for the shares. Now, looking at our gains, I already make the calculations. These 24 contracts, as we saw, expired this week. And we received this premium, which is already highlighted here. We also rolled over these puts, because that's we are here. As you can see right here, over the course of this week, we rolled over these puts. So we bought these puts back, and we sold another ones here, 22.50, and these also rolled over these 4 contracts. We also bought those back and sold another ones for next week, because by the middle of the week they were already at what set, and making the calculations, it was better to simply buy those back and roll over the position than simply waiting to mature. The return was higher this way, so that's what we did. We basically bought back these puts and rolled over the position, and then I highlighted the entire week here. These puts, of course, are the rolled over positions. So, but we are still with the positions open. So I'm not going to count on the cash flows they provided, because I'm not yet sure if I'm going to close a position. I'll let the position expire. So as things stand at the moment, our profit for this week was a little bit over $406. So yeah, it was a better week than the previous ones. So for the time being, we'll have to wait and see what's going to happen next week. I'm pretty excited because we managed to recover the price of the QQQ shares. We are already within the range, close to the range, the price range at which we want to stay, to see if we can gather some more sizable premiums, and eventually, if it goes to an all-time high at around 549, we can finally unload these shares for good. But we'll have to wait and see what happens, because there's still a lot of uncertainty in the market and anything can happen. So for the time being, this is all. Feel free to leave your comment section, your comments in the comment section down below. Also, feel free to send me a DM on LinkedIn in case you have any questions, and of course, feel free to like the video and subscribe to the channel. And we will reconvene next Monday to start the week number 46 in this challenge. And I'll see you there.